Our next guest sees more pain ahead in tech. Joe Zeidel is Blackstone's chief investment strategist and senior managing director. Joe, good to see you. You're forecasting a Fed course of rate hikes that will be, quote unquote, aggressive. What does that mean exactly? Aggressive and inappropriate, aggressive and necessary?
Well, thanks, Melissa, for having me. I think it's aggressive and it's necessary. And if you look at, the market's take on the Fed over the past couple months, it is really starting to really acknowledge that inflation, I think, is going to be a lot more persistent. So if you go back to the beginning of, the fourth quarter, the market was pricing in maybe one Fed hike in 2022. Today, the market's pricing in basically 3 full hikes. So I think it's going to take that, and it may end up taking even more. And if you think about the market since September, it's roughly been flat. Vol's been a lot higher. VIX went from 15 to say 25 over that period. So I think this fourth quarter is kind of giving us a preview as to what we might expect in 2022 when the Fed does begin hiking rates.
Joe, it's Tim. Thanks for joining us. The question really around rates is how do you gauge? You guys are fixed income investors as much as any, an environment where both equities will struggle with the Fed, but also so will fixed income. Can you help investors that are concerned on both sides of the balance sheet?
Sure. I think it's going to make for a challenging environment, especially in traditional forms of fixed income. I think investors ought to be considering alternative forms of fixed income where you have the ability to reset rates higher. That would be things like floating rate, as well as generally shortening duration. And I think that's going to be important across other asset classes as well. Real estate can serve as an alternative form of fixed income in that you can get, pretty good income streams and have the ability to grow income at the same time. So I think in an inflationary backdrop where the Fed is hiking, the ability to grow income streams will be critically important. And I think current cash flow is going to end up being king, certainly outperforming those future cash flows.
Hey, Joe, it's Jeff Mills. So I'll take a question on the equity side of the equation. So thinking about sort of the natural tension between a more aggressive Fed and then potentially a slowing economy into those rate hikes, how do you think about equity market leadership? Obviously, rising interest rates potentially bad for tech. But if you do have a slowing economy, then that's potentially a tailwind for tech as investors look for growth wherever they can find it. So how are you thinking about kind of the push and pull there?
Yeah, I think there is going to be some tension in 2022, but I think there's another scenario, and that is an economy that continues to boom at the same time rates are going higher. The difference between what the Fed is doing now and what it did in December 2013 when it last tapered is that back then in December 2013, households and corporations were still very much on their heels. Consumer net worth hadn't fully recovered at the point at which the Fed was tapering before, and corporate profits hadn't fully recovered either. Now, if you fast forward to today, consumer net worth is basically at a record high. You can think of that as the value of your house plus a stock portfolio. And today, notwithstanding, consumer net worth has basically been going almost straight up since COVID. And at the same time, corporate profits are likely to set a record as well. So I think the alternate course here could be an economy that continues to boom in 2022 in a self-sustaining way as policymakers transition to the private sector, but at the same time, inflation moves higher. And there, I think the tug of war is going to be between those companies that have high current cash flow or the ability to grow that cash flow versus the more speculative companies where those cash flows are weighted to the very distant future. And I think the more cyclically oriented companies will be the outperformers.
All right. And Joe, by the way, likes housing and cyclicals as well as value into 2022. Great to see you, Joe. Thank you.
Thank you.
Guy, I know, as you like to say, you dig Joe. Do you dig what Joe wants to buy next year?
And I congratulate him on his Hall of Fame induction, long overdue. Cyclicals, yes. And if you mean cyclicals in terms of resources, which I do, I think you got to be in those names. And they've been volatile. I mean, you just look at what Alcoa has done over the last couple of weeks, some of the fits and starts. But I think if you can if you have the temerity to stomach some of those moves, I think that's where you want to be in the resource trade.
You congratulate him because he's Jay-Z. I just want to connect the dots for the viewers who don't follow this along.
I mean, why do you have to connect people know that? I mean,
exactly.
Come on, it's fast money.
Okay.